All right, guys, back to work, back to work. One more day left this week. Let's finish up on a good note here on Friday. It's Thursday evening after all. It is the 27th day of January, 2022. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it is great to have you with me. My job tonight is to help us fund the best trades, setting up for Friday's trading session. I got a fantastic video in store for you guys and gals. Fantastic video in store for you tonight. Charts are already in the background. As you can see, got the oil, got the Nasdaq, got the S&P with us. Glad to see you are with us here as well. Got a lot of great trades setting up for Friday's trading session. We got some big news to kick us off tomorrow. Got some ranges, some big moves in the charts today. No shortage of setups on my radar for tomorrow. Not to worry, we're going to cover all my favorite trades in tonight's video. We'll also talk about some stuff to avoid to keep yourself out of trouble tomorrow, whether you're trading with us in the trade room or you're trading on your own. Before we jump into the video tonight, though, we've got a lot to cover as we go to the end of the week. Don't forget to subscribe to our YouTube channel. You know, I publish this video with my best trade ideas every evening on this YouTube channel. I don't want you to miss not tomorrow night's video, but next week's video newsletter. So make sure you subscribe. Hit that little bell icon. A lot of this stuff is time sensitive. If you guys have any questions, drop those questions in the comment section. I would love to answer any questions you might have along the way. And if you enjoyed this video as much as I enjoy making it, hit that like button for me. Appreciate you guys carving out some time every evening to watch my nightly newsletter. But enough of the intro, though. Let's get this party cooking here. Friday is right around the corner. What's the game plan for Friday's trading session? Well, boy, we had a lot of movement here once again today. Markets continue to be high volume and high volatility. We continue to see lots of opportunities every morning in our trade room. Right now, pretty much everything is bearish, right? Bear market down into a range on the S&P, bear market down into a range of the Nasdaq, bear market down into a range on the oil. The bears, they definitely have control of all of the momentum right now, but I'll tell you, it's not easy to find a good short setup right now. Pretty much everything looks good for the buy side. We got a lot of support zones underneath us. Would love to buy some failures off the lows here. Would love to grab a nice short squeeze going back up to Friday's close, right? We oftentimes see the end of the week snap back to those Friday's closes. So lots of really great long setups on my radar for tomorrow. And of course, you know me. I'm going to make sure we cover all the bases here for tomorrow as well. We will be looking at some short side trades, possibly off the highs here tomorrow, or of course breakouts going lower here. So we'll cover all the details in the video tonight. Speaking of tomorrow, though, tomorrow is a Friday. Let's make sure we all get in the same page here. We do have some big news tomorrow. Definitely, probably one of the definitely not as big as the news we've seen earlier this week, but the big news we have tomorrow morning, 8:30 Eastern time, is that personal income and outlays number, right? That will be the most, or at least the most substantial news on the schedule for tomorrow. So keep that on your radar for Friday morning. Also be aware too, Fridays do tend to have a little bit smaller window of trading opportunities. Things, slow down a bit earlier ahead of lunch. The window of trading is a little bit smaller. So, be aware of the time tomorrow. Usually after 11:30, 11:45, you got to be careful on a Friday morning. And then, of course, in the afternoon session, markets get a little bit less liquid, right? A little more illiquid, a little more gambling, a little more impulsive price action in the afternoon. So my strategy on Friday morning is always to get there early, find those trades early, get out before lunch, and enjoy the rest of the day. So be careful with the time tomorrow. 8:30 news, though, will hopefully get us going nice and early tomorrow morning. Let's get back to our charts, though, here. Back to the price action. S&P, Nasdaq, oil. Like I said, everything's looking pretty bearish right now, but it's tough. It's really tough to find some short setups right now. We'll talk about why I say that and how I plan on capitalizing on that tomorrow as we go deeper into this video here tonight. Let's grab the S&P first. The S&P, of course, had another wild session here. Well, what's the most important factor right now we have on the E-mini S&P? I think the most important factor we have is, of course, we had this big, strong run up into what is basically a trading range. As you can see, the market market kind of got knocked down there this afternoon. Now, you would think that if a big bull run like that was to fail, this market would come all the way back down and take out that low. And as you can see, didn't even come close, right? Didn't even come close. So we obviously have a big bull market into a trading range. Market races lower. They close their loop. They retest the low. And now we have what feels like a pretty good likelihood we're headed back up into that trading range. One of the biggest reasons why I said it's difficult to find some shorts right now is because you can see we've got some rising support trend lines, right, coming off of this low. As we go lower, you've got all of this support waiting down here as well. So, let's not forget, it's easy to forget right now that pretty much the Emini and the Nasdaq are really just one big weekly range right now. So, in a nutshell, it really is buy low and sell high, right? As the market moves lower, we run into support zones down here. As we run higher, we run into resistance zones up overhead. So I'd like to be a buyer on this. I would imagine that buyers could be looking for trades here in a couple different locations, right? If we go lower, we can look to buy using this range as a magnet, using these major areas of support underneath us as key levels to buy off of. I would imagine as we go higher here, this support trend line could easily be used as a place to get long on a pullback. Obviously, if the market accelerates going higher, we can find some buy setups on the way back up to take out these highs as well. As far as the sellers go right now, again, bears don't have a lot to work with. As the market goes higher right now, there really isn't, what exactly are we going to do here with a range magnet above us? And again, this is last Friday's close, which I'm sure if you guys have noticed, it's been dancing around that level pretty much all week here this week. It's been borderline obsessed with that price level. So I would expect that to act like a magnet, and I wouldn't be surprised tomorrow once the dust settles if we finish up right around that 81.5 area at some point late in the day tomorrow. If we do try to go lower here, again, there really isn't a lot of options down here because you have all of these lows. As you can see, there's that big low right from Monday morning, and of course we've kind of danced around these lows here. So you have to think there's going to be a lot of bargain hunters down there looking to buy into those lows here. So not easy. Again, not easy to find some short side trades here right now. So let's talk about it, right? What type of setups can I look for here for tomorrow? I think really at this point now, the three I think that are probably the most plausible right now would be getting this market to, of course, go higher. And really the question is, right, do we look at this as a one try, two try for the bears and look at that long off the low here? Or do we end up really punching higher, finding channels, right, and buying pullbacks there? That's one kind of, those are two kind of easy ways to think about it. If we go up here right now, there's a good chance we can use this trend line to try to get underneath the moving average, rope in some of those bears, and look for what I call a failure into pullback combination off of that low, right? Again, using that rising support trend line. If you've taken my free trading classes already, you know that we love to use that two try rule, right? There's one, there's two. So this would be a great spot with all those bears trapped in to really get some good entries off of that low, right? So failure setup below the moving average into that pullback combination. That would be something to keep an eye out for tomorrow. At the same time too, this could easily start to run higher here. We call these 1, 2, 3 reversals. Now, of course, once we see that 1, 2, 3 reversal, now we can go out, we can find a new bull channel. We can find a new trend line, copy and paste it down, find that channel, and look for the entry right off the low of that channel. One of my favorite entries in these kind of situations is going to be those trap into failures, right? So we get that big, strong push going higher and mark up that low, get underneath, right, that prior swing, as well as the moving average, trap setup, failure setup below the moving average into that pullback entry as we go. Trap, failure, pullback. Target number 1, back up to retest the high. Target 2, of course, now is back up, right, to retest those. And if you got a runner on it, right, that there's a couple more big tops up here, right? That'll make for some easy objectives if it keeps on going. That 44, right? 40, that 44.40 area really is easy to see. One more thing as we go higher here, wouldn't totally surprise me if the market really starts to spike, right? And run. It's done that a couple times already this week. Keep your eyes on a 2-try trap pattern, right? 2-try trap pattern as we go higher here. Strong run up, shallow pullback, higher high in price. That 2-try trap pattern, right? We learn all about traps in the free trading course. And by the way, guys, if you haven't taken that free trading class yet, I know a lot of you guys have, I'll put a link up here for you in the upper right-hand corner. Grab that little button up there that popped up there. Take the free trading course. You'll learn all my favorite entry setups, the traps, the failures, the pullbacks, the strength. More importantly, though, you'll learn how to find the right locations to use them and which ones to avoid. We'll go over a bunch of rules to follow. It's all part of that free course. Great roadmap for you guys in the upper right-hand corner there. So if you haven't grabbed the free quick start class yet, definitely grab that linked up in the upper right-hand corner. Again, as we go higher here, it's going to be pretty difficult for us to want to get short just because, again, we've got this rising, right, support trend line. The only way we can really look to get short on this as the market, right, goes higher here would be to get back underneath this trend line, right, and ultimately use it as resistance. Not going to be very easy, right? As you can imagine, especially with this range up overhead acting as a magnet for us. So that's pretty much the only way we can really get into this thing here would be wait for it to pop up, and then of course get those bears to come in, hold underneath it, and then grab that. And maybe we get lucky with a little trap there, right, off of that trend line. But that's going to be the entry that we're going to be looking for here on the short side. Probably not very easy, but that's what we're looking for, right, if we go higher here. Also, too, keep in mind, if we do run higher, this thing may turn sideways at some point tomorrow, right? What do we do with a bull market into a trading range? We find levels of support, and we combine those levels of support along with entry setups, right? Like a failure pattern, right? Coming off of that low here. Again, everything trying to go back up and retest those big highs up overhead. That's if the price goes higher here. Pretty easy to be a buyer on it. A little more difficult here, right, to be a seller. As we go lower here, how do we buy down here? We have to respect momentum because the bears are going to be a lot, the bears obviously have all of the momentum right now. Let's say, for example, right, we trap high up here and then race back and go lower. Remember, again, we've got a buy zone down here below the range. We've got the low of days down. There's no shortage. You can easily see. There's no this whole area here right now, could be a buy zone down there. I'm just trying to keep it relatively simple here for you guys without going into too much detail. There's a lot of reasons I want to buy down here as we go lower. And again, we're underneath this big range this week here. At this point now, we want to look for a 2-try failure, right? So as we go lower here, get that move going lower. Bears try once, bears try twice. Trap in those bears. Remember, momentum is bearish right now. Range above us is a magnet. Major areas of support are underneath us here. 1 try, 2 tries now because, of course, this is a kind of a reversal setup, right, if you will. And, of course, we can run those stops, right? All those stops will be sitting right above that high. We can buy right into those stop losses, right? Those are called failure patterns. 2-try failure patterns as we buy off the low of not only this range, but the big range, right, that we talked about earlier today. How do we sell this market as it goes lower? Very carefully, very, very carefully. We're going to have to simply break down. We're going to have to hold the pullback and we have to jump off that moving average, right? We've really got to get a real strong jump off the moving average. Now remember, it doesn't matter how strong the move is. They have to hold it and keep going. This is a really good example right here. This whole move down never really pulled back to the moving average. Once they do, the bears go nowhere with it. That's one of the easiest giveaways here that we're probably going to end up right back up right into that trading range. Same thing over here, right? If the market runs and, if it basically runs like this and it can't hold that pullback, again, that's where you apply that one try, two try failure, and we buy it back up into that trading range again. As we go lower here, though, let's say we get that breakdown. Let's say the bears now hold that pullback and go. This is definitely where we're going to want to break out a trap entry. Traps will definitely be necessary up here. The key will be to get a bunch of strength going lower and then look for those traps just above prior swings here, right, up around the high of that channel. And that'll be about as reliable as you're going to get on that as we go. What I would look for down here, though, is it's very likely that we get that strong move down, get that short to retest the lows, and then look for that 1-2 failure and go right back up again. Because, again, this is a very big area of support. So, again, as we go lower, 1-2 back up again, 2 try failure to be a buyer, or 1-2-3, right? 1-2-3, strong move down. We get that breakout of this trading range. We drill down, find our short off the high of that channel. Again, maybe it's a trap, it's a failure, it's a pullback combination. Again, the same price action setups that we talk about in that free trading class, that quick start class. And again, if you haven't grabbed it yet, learn the setups. They work great. Get a whole roadmap laid out for you inside that free trading course. That little link up there in the upper right-hand corner. But imagine now we get that short, right? We then retest that low, right? Because that, of course, is the objective now. And again, I'm drawing it right here. It could be here. It could be here. It's all kind of the same stuff, right? This whole area is a support zone, right? So we break down, we retest it, right? Now, of course, big move down, retest. We look for that kind of double bottom off that low, 1 try, 2 try failure. Stops are sitting right above this high. It's that failure. And then what do? After that failure, you draw that new channel that we've talked about all week, draw that new channel, find that first test, right? And buy that first pullback. Right? So again, really strong move down, that short off the high of the channel, great, right, fantastic short. Again, going to want to make sure you get it off the high of that channel, ideally like a trap entry off that. And then again, you've got your 2 try failure after you retest. And then of course that new channel coming up, buy that first test as you go back up, potentially now up into that trading range. And we'll know more once we get there tomorrow. That's the way I'm looking at this right now to trade it. Again, the big thing right now is the bears have momentum. I think the easiest money right now, though, will be going up. Do we get that pullback off that trend line, right? Do we go up, find that new channel and buy that entry, right, and buy the pullback? Or do we kind of, short squeeze as we're going higher here and grab those traps right below those lows as well? Again, don't forget, we're going to see a lot more examples of these price action setups as part of that free trading course linked up in the upper right-hand corner. Let's grab some NASDAQ, shall we? NASDAQ is very similar to the S&P tonight. The NASDAQ, of course, also you can see here, right, makes that another quite volatile trading day on the NASDAQ. Boy, it's just a classic. We talked about this last night, right? Classic dump down, 2 try, and then ripped back higher. If you watched last night's video, you were definitely ready for that here today. Very similar, though, on the NQ. Most important factors right now are the bulls, of course, right, have all of the momentum the bulls made a strong move up into a trading range, right? Price action pretty much, gets, falls out of bed, as shortly after noon here. By the time we pull back to the moving average, they retest the low. The bears, again, why didn't they make it all the way back to that low? This leaves a big, wide open question mark right now for those bears. It looks like they got stuck around that 14,000. And much like the S&P, as we mentioned earlier, if this market pulls back right now, there's going to be that rising support trend line. There's going to be some trend lines sitting here. It's going to be difficult. It's going to be difficult for us to want to sell into this thing right now. So, my vision on this is getting long, either on the trend line or on the short squeeze, right? Going higher here. We've got our trend line coming up. So, just like we talk about on the S&P, we roll lower, bears once, bears twice, right? Buyers can buy off of that trend line. Buyers, of course, can also buy a full-blown failure or full-blown reversal, right, as we go higher. And just like we saw last night, here, this range, let's say they go up, run it lower, we're still running into a ton of support down here. There's no shortage. You can see there's a ton of support. There's basically one big range here this week. So, ranges act like magnets. If we run lower, we're looking for that run going back up, into that trading range again. So this doesn't look like there's very many easy ways here right now for us to get short. So when there's no options to get short, we'll look for those bears to get in trouble and look to buy into those stop losses here. Again, as we go higher, a lot of this will be similar to the S&P. There's a lot of similarities here between these two markets here tonight. As we go higher here, I would love to get back to this trend line. Get back to that trend line here, right? Get underneath that moving average, grab a failure into a pullback combination, right? Failure setups will trap in, right? In a bull market, we go below the moving average, trap in those bears with a failure pattern, right, off of that low. Failure pattern off of that low. And then, of course, that pullback that follows suit. Okay, targets, of course, again, back up into that range. And then, again, that 14,411, that's Friday's close, last Friday's close. So you have to think it's a big magnet as we go higher here. And there's a big bunch of wide open space up there at 14,610, 14,611 for that major high up overhead. That's one way that we can buy this here tomorrow. This is not a great example of a 1, 2, 3, but possibly a 1, 2, 3 running higher here. Again, you always want to, kind of drill down to your faster time frame. This is a 5,000 tick chart. We'll drill down to a faster time frame. We'll mark up our new high, mark up our low, right? Find those prior swings. I'm obviously simplifying this here for the illustration here tonight, but look for that, right? That first test, right? First test, always the best test. We got that trap, we got that failure, we got that pullback combination, right? Trap pattern, failure pattern, pullback pattern. Then again, we pretty much know where the targets are at that point, right? Back up to retest these highs. And if it keeps pushing, we know where those big highs are waiting overhead. We may see a short squeeze. Short squeezes are pretty common right now, right? So, bears get out, the market punches and runs higher. If it really spikes up and runs, keep your eyes open for those two try traps. Right, as we go. Strong move up, shallow pullback, higher high in price. Traps, baby. One of my favorite. I'm always looking for a channel. Channels are always a kind of a great add-on for these two try traps. Mark up that high, find that channel low, even better. Even better for the buy side. Now, this is not going to be an easy one to sell. As the market goes higher here, it's not going to be easy for us to sell this. This trend line is a little bit flatter, so we're going to have to get underneath it, right, and then try to use that here as key resistance, right? So we're going to have to get, as we go up, we'll probably end up going back into that range here, popping up, and then get up above that range, right, for that short from there. It's a little bit tough to speculate on how that entry will look like right now, but it may end up, back into this range here, popping up, get up into that area of resistance, obviously now, and we can use one of those failure setups to sell off the high of that trading range, right? That's pretty easy to kind of see that. Target on the other side of the range, and then as always, the size of the move above the range is the size of the move below the range, and there's your next objective right there, right? A failure above the high of that trading range. The interesting part here will be if we go lower, right? Let's say we do pop up and run lower here. Think about how much we go above the range, back down below the range. That will create a key area of support, a one level among many levels of support down here. At that point, again, we do want to respect the bears, because the bears will have all of that momentum. So what you want to do is think about the one try, the two try failure pattern, right? And basically use those stop losses of those sellers to fuel the market running higher. And of course, as I mentioned before, oftentimes these two try failures will really snap higher. We can grab a new channel off that high, find that low, and we can buy that first pullback from there, right? So failure setup, two try failure because going against momentum, and of course that pullback setup, trap setup, right? Whichever of the entry setups that we get. Again, you'll learn those in that free trading course we mentioned earlier. So again, some easy ways to buy off the low of this trading range here. If we go lower, how do we sell it, right? As we go lower here, again, not very easy. In fact, I would say the Nasdaq probably has the least potential to have a nice, easy way to sell short on this. The S&P at least has a big, the S&P is a big, wide open space. This range right here on the S&P is a lot more forgiving. It's a lot bigger. On the Nasdaq, though, you just got levels everywhere. Level here, level here, level here, level here. It's not going to be easy for us, to find a good entry. What is probably going to be more likely on the short side is rather than a 1, 2, 3, breakout and then selling right into that low, think about the kind of the break and grind, right? So we break down, we grind and run lower. As we grind down like that, think about those traps above those prior swings, right? The 1, 2, 3 breakout can definitely work on this, but what is probably more reliable in this situation, because of how tight this area is to get that grind, because those grinds are always really, really good proof. You're going to probably get that first pullback will probably end up being sold, right? That push down, grind lower, right into that. Again, look for traps in this situation, because you don't want to be selling too low into the low of that big range down there. If for some reason the S&P and the Nasdaq really do push lower, there's no reason why that can't happen. Right? Maybe we do take off to the downside. Maybe the bears do hold that pullback and we run lower. We get that. Again, that channel, and they just keep on going. If we do start seeing a significant break lower here, now we can look for those new channels and keep selling short. It's very difficult to find the next objective down here. There's not a lot down here. We'll have to know more, but we'll look for more of that tomorrow morning in the trade room. For right now, though, as you can see here, we've got our range back above. I think the easier money here with the buy side, right? Buying off that low with that two try failure, getting up off this trend line, buying off that trend line, getting that 1, 2, 3 reversal, grabbing that first test, because the first test, right, is always the best test. And again, as I mentioned before, if we do go into a range up here, right, just keep on looking for those chances to buy underneath that trading range. Pretty simple idea there on the Nasdaq. And I'll tell you, these buyers, I would say the Nasdaq probably has a lot more room overhead here than the S&P does, that big top over there. So, maybe it does something like that, right, where it pops up, right, or we pop up, hold that pullback, jump up, right, we've got that, right, first pullback going and run from there, right? Now you've got measured move off that leg into that leg. So if it really does push strong, right? If we really do push strong here, remember that first leg is oftentimes going to be your measuring leg. That'd be something to consider there if we really do see a very strong push going higher there. So again, a lot of similarities here on the Nasdaq. And again, looking for that push going back up into that trading range. Let's wrap things up here now over on the crude oil. Looking at the oil futures. Oil is, surprise, surprise, very similar here. The oil you can see here has, I think, probably the most important factor on this. Again, oil market, of course, runs up basically into a trading range. This is a 2000 tick chart, by the way, on the oil futures. We run up into that trading range. We get this big drop down, right? What do we call those? Strong moves in one direction. We call them open loops. They're going to retest the low. And you can see all the buyers kept trying to buy this thing, but they kept on trying to force it to retest the low. They retest that low. Remember, as we always say, anytime we see a strong move in one direction, we're usually going to see a retest of, in this case, of that low. And then everybody takes their profit. Bears get out, comes ripping back higher here right now. This is a great example of one of those slingshot reversals that we see so often, where you've got this trading range, right in the middle. The market runs below the range and starts to slingshot back in the opposite direction, right? This kind of momentum turn. We measure the amount below, we project it back above, and we can easily see there's this big objective now back up around that 88.5 area, 88.54 area. So we definitely have that on our radar right now for the bulls. So this range up overhead, we assume, is the big magnet. Again, big move down, retest, snapping back higher here. What I'm always kind of looking at in these situations, whenever we have a range that is kind of slingshotting, back up in the opposite direction, is, first of all, can we find a 1, 2, 3 move here? Right? Get that 1, 2, 3 move going higher, right? Find that new channel, drill down to your faster time frame. That will probably be the easiest money you're going to make going back up to retest these highs, right? So you got that 1, 2, 3, 1, 2, 3 reversal. We know where the market wants to go because we have, of course, our pendulum swing, right? Pendulum swings there. And again, we just got to find our channel, drill down to our faster time frame, find that trap entry, find that failure entry, that pullback entry. And again, with the same entry setups we learn in the free trading course. If you haven't done so already, if you haven't grabbed it yet, you can grab a link to get access to that free course to learn all the entry setups in the upper right-hand corner there. We may also see it too. It may also, grind higher, short squeeze, right? Grind higher. Whenever it grinds higher like that, mark up that high, mark up that low. Find some prior swings. Get underneath a prior swing that'll almost always put you underneath the moving average. That'll give you a trap setup, a failure setup, a pullback setup, right? And you're off from there, right? Plenty of ways to buy this if we get this thing to run. What I would be a little more careful with is, let's say the market just simply runs right back up to that pendulum swing. Right? If it really runs up to that pendulum swing, now you want to think, okay, we're definitely bullish, but the market at that point is probably gone, quote unquote, too far at that point. Lot of momentum. What I would do is try to wait for that deep pullback, use that 2-try failure, and then snap it right back up to retest the high. And that may come off of this area. It may come off that trend line. I don't know exactly where that level will be yet. But again, imagine, and obviously we'd love to get the entry before we get there, but imagine we don't, right? The market, whatever runs higher here, I think a 2-try trap would be a good entry if it runs higher here, right? Strong move higher, shallow pullback, strong move, shallow pullback, higher high in price. That trap will be a fantastic entry as we go higher, but if we don't get the entry there, or let's say we do get the entry, right? Let's say we do get the entry, we take out that pendulum swing. Now at that point unless we keep on going, that objective now will probably some profit taking. At that point now, what you'd like to do is get a nice deep pullback here. Nice deep pullback, trapping those bears with a 2-try failure, because of course a deep pullback says 2-try failure. We've talked about the different pullbacks on this video this week. We've covered a lot of different pullbacks and breakout patterns, and we've covered a lot of different details throughout the week here this week, so I won't go over them again here tonight in this video. But if you missed the earlier videos, make sure you go back on our YouTube channel here and watch those from earlier this week. One of my 4 types of pullback setups, right, are called a 2-try failure pattern. Again, this would be after we retest, nice deep pullback there, after we complete the pendulum swing. Nice deep pullback, right? Buyers take profit, rope in those bears with a couple tries, and hit them again. That may definitely be the case here, right? So 2-try trap as we go higher, right, into a 2-try failure, right, below that moving average as we go. And then again, let's kind of wait and see what happens up here. It wouldn't surprise me at all if the market, 1, 2, 3, we find our channel, drill down, find the entry there. We end up top here, into a trading range of some sorts up here, right? What do we do with a bull market or trading range? We find levels of support below the range. We wait for pullbacks to support. We don't try to pick a bottom, right? We're not trying to pick bottoms on that. What we'll do is we'll wait for those bears to come in, get them to complete or get them to commit off the moving average, buy right into those stop losses. And then don't forget, you've got a couple more options here. That pendulum swing is the next objective, right? So if we can get a nice strong push coming off that range, now we can drill down again to our faster time frame, find that new channel. That is a failure, and I'll call it a pullback entry. It's obviously not just a pullback entry. Again, you guys have learned about the price action entries. Those are usually going to be traps or failures, then into pullbacks as you go back above the moving average. And again, your objective is on the other side of that trading range, right? And then, think about this too. If the market runs higher here, right, big blast up, using this area now as a key area of support, right? So if it does start to push higher here, think about how we can get up, get that moving average above that high, right? That's a good proof of some acceptance, as we always say. Rope in those bears, right? Rope in those bears, failure into pullback combination, right, as we go higher. So we'll look for the entries on the way higher here, obviously. If they keep on going through it, definitely be looking for a way to use this 88.5 area as a key area of support. Big move up, get back below the moving average, trap in those bears, grab that pullback. And then where do we think this market might want to go? Well, we've got 90 overhead. That's one pretty easy way to think about it. You could also do something like this, where you measure the amount we go below this range, project that up. Where does that put us? Surprise, surprise, right at $90 a barrel. So you got to be thinking that $90 a barrel. If these bulls get on a horse tomorrow, you got to be thinking that 90 there is very reasonable. Right now, of course, it's just fun speculation right now. But if we can get this thing to push higher, right, grab a wrench in the way higher, and then push through these highs, all of a sudden some breakout pullbacks above that trading range do become a very good reality. Now, of course, I'm sure there'll be some things I missed in tonight's video, and obviously we'll cover more of that every morning in our trade room. Don't forget, we get together 8 o'clock Eastern time every morning in the trade room. I'd love to have you there trading this stuff right there with us. I'll put all the membership links, all the free trading class links. I'll put all that stuff right in the description of this YouTube video, or if you're on the blog right now at Sideways Markets, I'll put a big button for you right below me tonight. All right, guys, thank you so much for tuning in. It's been a busy week. As you can hear, my voice is hanging on by a thread right now. It's been a great week in our trade room. I hope I'll see you there with us in tomorrow's trading session. In the meantime, again, I'll put all the details for you guys in the description. Grab that free course, learn the setups we talk about in the video tonight, and get registered for membership. And I'll see you guys next time in the trade room. My name is Joseph. Thanks for tuning in. Have a great weekend. Got some more good sports on TV this weekend. Can't wait for the games on Sunday. I'll be back though on Monday night for our next edition of our nightly newsletter. In the meantime, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.